Welcome back to Milo Majesty Mentorship on Reverse Pattern. So this is lesson 5 of 6, head and shoulder. So if you're yet to watch some of my previous lessons of lesson 1 to 4, you can go ahead to watch them and have a better understanding. So we are going to be discussing about head and shoulder today on how to trade it as an institutional trader, not as a retail trader. So let's get started right now. So we have head and shoulders here. You can all see this is the head and then this is the left shoulder and also this is the right shoulder. So I think before starting how to trade it as an institutional trader, I should first give you guys on how retail traders trade it and then what most YouTube traders are teaching on their YouTube channel. So this is what they teach. They call this place head. So let me just type head there. So they call this place head. And then we call this place left shoulder. So let me type it for better understanding. Left shoulder. They call this place okay. They call this place right shoulder. So they call this place right shoulder. So after that they draw a support line there. So that's when price break through this support line, that is when they're going to be finding their own entry. So they draw a support line here. Some of them call it I think neckline. So let me write a neckline here. Neckline. So this was most of them teach on their YouTube channel because they don't really understand the reason why price is doing what it's doing, the reason why price is going up or coming down. So they call this place neckline. So they start to find their entry and every single time market break through this neckline, because they call it a support that is going to support the price to go back up. But when price break is, then they are going to start finding their entry. So I don't know, probably they are going to find their entry from here. So if likely they find their entry from here, they're going to set their stop loss there. So it's possible for them to even lose this money, to lose this trade. Can you see this trade is going to run on loss? But if probably they set their entry here, and then what most of them do is just like they're going to set their stop loss there. I think the previous swing guy. Can you see, without money management, without risk control, without because they don't really understand what is happening in the market, and then they're going to say that take profit from this level. They're going to say just take profit from this level of the edge to the neckline. So they'll project from neckline to edge. Sorry, my bad. They'll project from this neckline and then okay. Let me just project it. And they will say that take profit here. So this is what they do. This is what they teach on their YouTube channel because they are not aware of the reason why price is doing what it's doing. Can you see? And they see their loss, their stop loss very huge. No risk control, no money management, nothing. So this is what most people teach on their YouTube channel, and then I can even give you example of where this system does not even work at all. When price retraces down and then it's reversed back up, you see what's up here, because this one you can call it like a fake breakout here. You understand? If they have to enter the trade from here, they're going to lose money, and then that is why they end up in loss every single time. And also they don't have money management that is controlling them. They don't have risk control. See, their stop loss very huge. So that's just it. So this is what most people teach on their YouTube channel, but I'm not going to teach you that. I'm going to teach you a way that you're going to trade, and then you're going to trade like a bank. So I think, okay, let's start how to trade like a bank. So I have to delete this because you don't recognize all this in price. You don't recognize head and shoulder. You don't recognize neckline. this support line, we don't use that as an institutional trader, and this projection line, we don't need it. So then this says I have to delete everything. So okay, so as an institutional trader, this is how we trade head and shoulder. Every single time you want to take a position, every single time you want to take a trade, you have to study the past history, the past pattern that formed, the past price level. So we have to take our story from here. Can you see? We have a bullish trend there. So we're going to study this area, from this area to this area. What do you see? You have a bullish trend there, a bullish trend of which price is going higher high and higher low. So let me just draw the pattern so for better understanding. We have higher high here, higher low, higher high, then higher low here, then we have higher high here. Can you see? Then we have we have higher low here. Sorry, we have, okay, can you see this pattern? So this is their head and shoulder. Can you see? So their head and shoulder is forming there. This is the head and then this is the shoulder. So but if you have to study this price, okay, let me just reduce this PS. So if you have to study this price as an institutional trader, you have to study every single movement that happened. So we have a bullish trend from this level. Yeah, so you have a bullish trend, you have a bullish trend. But what happened there? What happened there? Can you see? This price has to go below this. So you have to put our breakout structure here, BMS. So we have breakout structure here. So breakout structure is when price change direction. So every single time price change direction, what banks are telling us, like, we are no more going to that direction again, so we are going opposite direction. So you can see that we have a breakout structure here of which price go below the resistance retracement line. Understand? Higher low. So we have a breakout structure here. So what should we be expecting for? What should we be waiting for in the price? So every single time you have a breakout structure, we should always find our entry in this level. So you're gonna set your entry here, then set your stop loss there. So you set your entry here, then you set your stop loss there. Can you see? Can you compare this stop loss with what other YouTube trader teach on their YouTube channel? Can you compare this stop loss with what other people where other people are going to set their own stop loss? Like people that are not aware of what is happening in the market. So why am I setting my entry here? You can see number one, let me explain this for better understanding. You can see number one, we have a liquidity here. This swinger is a liquidity, and then we are not expecting price to go above this level, above this level here. But we have liquidity here. Can you see? So I can decide to set my entry where there's liquidity. How do I know that there's liquidity here? How do I know that I should set my entry and then my stop loss here? But if you don't understand the concepts of institutional trader very much, I will always advise every single time you want to enter a trade, always set your stop loss in the previous swing guide. Can you see? You're going to set your stop loss there. But if you're an experienced trader, you can set your stop loss there. Okay, I think I should just explain the reason why I'm setting my stop loss there. Okay, let me just explain it so you guys can really understand what I mean. So you can see from here, what happened here? What happened in this moment here? I mean from here to here. We have a nice, okay, you have a nice bullish trend also. Sorry, let me just start the level from here. Let me start the level from here. So you have to start what happened there. So that's the reason why I'm setting my own stop losses. So let me just explain it so you can really understand what I really mean. So we have You can see we have a bullish trend also. Higher high, then higher low, higher high, then higher low. So we call this one failure swing. This eyes refuse to break this level. Can you see? But what happened there? Is break it here. Can you see? So we have another break of structure here. So every single time we have a break of structure, then we are not expecting. Then after that, price have to do what? Price go back up, a bullish trend to retest that other block there, and then after that we have a nice bearish movement that break the higher time frame structure. Can you see? So we are not expecting price to go above this level anymore. So that is the reason why I'm going to send my own stop loss there. Okay, so let me reset it right now. So you're gonna set your entry from here. You have liquidity here, so you know that bank is going to opt for that liquidity. So you shouldn't be expecting to set your own stop loss there, your own entry there. So you set your entry here. Can you see? It's a proper money management. So where should I set my take profit? I'll be explaining this in my YouTube channel, and then some of my video on how to set your stop loss, your exit, this how to set your entry now. So if you have any question, you can comment in the comment section, and then I'll be glad to receive your question for better understanding and clarification. So we have you enter into the trading, and then you set your stop losses. So where should you exit? Every single time there's a break of structure, you have to identify every level that remains for the market to break. So the level that remains, we have this was a swing low here when I was drawing I'm coming, let me just explain this. We have higher high, then higher low, higher high, then higher low, higher high, then higher low, higher high. So every single higher low here, we should be expecting price to come below it. So every single higher low here, we have higher low, sorry. Every single higher low, we should be expecting price to come below it. The reason why price is doing like that is just like to us for liquidity, because a lot of people are going to use this, for example, a lot of people are going to enter from this level, call it other block, they're going to set their stop loss there. Like they're also trading institutional trading concept, because they don't really understand the full concept. That's why they're going to be sending their entry here as a bullish movement. They're going to lose money. Likewise this place also. They're going to lose money. Likewise this place also. And also likewise this place. So many people are going to like to set they will draw a mitigation block, and then they will set their entry here. They'll set their entry here, and then the stop loss. So this is what happened in the price. This is what happened in the market. Markets end up taking them out of the trade. So that's just because they don't really understand the full concept of institutional trading. Every single time we have market break a level, you should be expecting all the single level higher low here to be taken as a liquidity. So it's automatically going to change to liquidity. So that is where you are going to set your stop, your take profit. You can take your first take profit here. You can take your second take profit here. Then you can take your third take profit here, your last take profit. Can you see? And after that, you don't have to be greedy. You don't have to be greedy, and then you are going to study what's really happening again in the price level. Or let's understand what is really happening in a higher time frame. Maybe the price is still going to go back up, or maybe the price is still going bearish. Can you see in a higher time frame? In a higher time frame, we have a bearish movement. So I should be expecting this price to go more. So that is just it. So that is how to set your entry, and then that is how to set your exit. It's not like you trading like how retail traders are going to be trading. So this video is just helping you transform you from a retail trader and then becoming an institutional trader. So So this is how institutional traders set their entry. And then you can see you have, I think, 1:10. So this price is giving you 1:10. Just imagine you risk 1% of your account and then make it 10% in a single trade. So this is crazy. And then this so that just, it's not like you trading like institutional trader. And then this is what other people teach on their YouTube channel. You end up drawing this line. I'm coming. Head and shoulder, of which bank doesn't recognize all these levels. Can you see? This is what they draw on their YouTube channel. This is what they teach you. This what other YouTube trader teach on their YouTube channel. So they end up calling this on left shoulder high and then right shoulder, of which bank doesn't recognize all these levels. We study price action. We study what really happened in the price in the market, because price is coming down right now. It's not that people are selling. No, it's algorithm that is controlling the market. You can't just imagine that one currency pair is going to go above another currency pair. No. So it's algorithms that control the market, and then there's a negotiation between countries and banks. So that is just it. That is just it. So don't take my word for it. Go to your chart and find this level out in the price by yourself, and then see what happened. Not like you trading like what other people are teaching on their YouTube channel. All these concepts are not working anymore. And also, if you're new to this channel, you can subscribe to this channel. That is the only thing you can do for this channel to grow. And also, you can like this video and then share with other people. So see you guys in my next video. Have a nice day and a nice trading. Bye.